Welcome back. So the color across Asia is actually red, very clear shade of red. Let's see if we can be an outlier, because last couple of days, the Indian market has been underperforming as well. We've been quiet when the rest of the world was moving along. So, can it be the reverse today? Because otherwise, regional markets, the Hang Seng, you can see down 1.6%. It's ditto for Japan, and the mainland Chinese market also down by about 0.5%. That's the implied open right now. It's suggesting a totally flat start. So let's see. Lots of stocks and lots of earnings to go over. Some good, some not so good. And our team is standing by with the CNBC-TV18 list of stocks to watch. Guys, morning to all of you. Sudarshan, let's start with Bajaj Auto.
Good morning. So for Bajaj Auto, it was an inline set of earnings for Q4 FY25. Company has managed to hold on to margin of 20% for 6 straight quarter. And for revenue, it was supported by double-digit growth that company has seen in premium motorcycles, electric two-wheelers and commercial vehicles. But it was partially offset by suspension of KTM exports that company had seen in Q4 of FY25. It has also announced final dividend of rupees 210 per share. Now, talking about the final numbers, profit, revenue and EBITDA have increased by 6% each, and margin has come in at 20.2% versus 20.1% in the same quarter last year. About the outlook for domestic industry, company is expecting a growth in the range of 5 to 6%, almost at the same level that industry had seen in FY25. And for exports, it's expecting a healthy growth, and that would be in the range of 15 to 20%. One thing that would be in focus is the company's commentary about the rare earth magnet supply from China. Company is saying that any delay or disruption in the supply may impact the output by July. But on the back of earnings that were in line, I'm going with green for Bajaj Auto.
Well, in fact, we'll have the management of Bajaj Auto who will be joining in at 9:30 a.m. to detail their numbers as well as the path ahead. All right, let's focus on Mazagon Dock then. Ria joins us to help us out with a quick analysis on that particular name. Ria?
Well, yes, good morning. For Mazagon Dock, the Q4 has been quite weak, although the full year performance has remained healthy. Focusing on Q4 first, the profitability has been sharply lower. EBITDA and net profit have fallen by around 83% and 51% respectively, both on a year-on-year basis. Margins have also contracted by over 1,400 basis points on a year-on-year basis, and they've declined by around 2,300 basis points on a sequential basis as well. Now, this profitability has been impacted by significantly higher expenses in this quarter. Subcontracting expenses have gone up by over 9 times over the previous year. Provisions have also gone up by around 5.6 times over the previous year. Now, in the Q3 earnings call, the company had said that these provisions have been created for excess inventories from ships with expired warranties. And while the components are still in good shape and may be used in future projects, these provisions are expected to be reversed upon utilization. Apart from this, the full year performance has remained healthy. Revenue and margins are above guidance, but today we're expecting the stock to open in the green because of the weak Q4 performance.
All right, Ria, thank you very much for that. Let's talk about Ola Electric now. Sud is here with that one. Amara Raja is also something we'll focus on. So, good morning.
Good morning, Prashant. So for Ola Electric, it was very weak Q4. But if we believe to management's commentary about Q1 outlook is looking healthy. So now talk about the numbers. Losses have expanded both sequentially and year-on-year. For Q4 FY25, company has reported loss of rupees 870 crore versus rupees 416 crore that company had reported in the same quarter last year. Revenue was down 62%. EBITDA loss has increased to rupees 695 crore from rupees 312 crore. But now talking about the outlook, company is saying that adjusted revenue growth may be in the range of 23 to 31% in Q1 FY26 if you compare from the level of Q4 of FY25. Deliveries are seen increasing by 28%. Adjusted gross margin may increase to 28 to 30% from the level of 19.2%, and auto EBITDA margin may be minus 10% from minus 78.6% that company has seen in Q4 FY25, and on consolidated basis, EBITDA margin may be minus 25% in Q1 of FY26 versus minus 101.4%. But on the back of earnings of Q4 FY25, I'm going with red. Now talking about Amara, it was an operationally weak quarter. Profit was down 30%, revenue has increased 5%, but EBITDA has fallen 17%, and margin too has seen a fall of almost 300 basis points. So I'm going with red for Amara Raja too.
Okay, all right, got that, Sudarshan. Thanks very much for that. Let's move on to some more numbers. We have Vivek joining in, Suzlon Energy and SJVN. Vivek, hi, morning. Suzlon looking good?
Good morning. Suzlon looking very good indeed. A very healthy Q4, very healthy FY25. And from the con call yesterday, appears that FY26 is going to be very strong as well. Let's have a look at how Q4 panned out, led by very healthy volume delivery at almost 573 megawatts. Revenues higher by 73% on a year-on-year basis. EBITDA up 94% on a year-on-year basis. Margins higher by 200 basis points, largely led by the healthy order mix as well as a higher portion as far as the OMM part of the business is concerned. Profitability, optically much higher, almost 4x times jump, but largely aided by deferred tax gain that the company saw of around 600 crore. Despite that, our profitability is still quite healthy. Now, when you're talking about the order book is quite strong at 5.6 gigawatt. It has moderated on a sequential basis, but we need to see what is the kind of order accretion that the company has as far as Q1 FY26 is concerned. Now, the interesting part is from the order book, 91% is from the newer generation S144 wind turbine generator, which ensures that the company now will have a structurally higher EBITDA margin range. Now, as far as the FY26 guidance is concerned, all of the key monitorables for Suzlon, the WTG volumes, revenue, EBITDA and PAT, the company has given a guidance of a 60% growth on a year-on-year basis. Along with that, the WTG segment contribution margin has been guided much higher at 23%. Now, coming to SJVN, a muted quarter as far as Q4 was concerned. Revenues are higher on account of much higher installed capacity and higher blended tariffs. However, the power generation volumes fell 4% on a year-on-year basis. So revenues are up 5%. EBITDA on a year-on-year basis was flat. EBITDA margins has dipped on a year-on-year basis, almost 200 basis points. And it's a loss largely due to much higher operating expenses that the company has seen across the board. So loss of close to 128 crore versus a profitability last time of over 60 crore, going with the red as far as SJVN is concerned.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Ria. She's back with us to tell us about a couple of real estate companies, Prestige as well as Sobha. Ria?
Well, yes, Nigel, both Prestige and Sobha have reported their Q4 numbers today. First, coming to Prestige, the Q4 revenue and EBITDA have declined by around 29% and 35% respectively, both on a year-on-year basis. But remember, as per the operational update in FY25, the pre-sales were also down by around 19% on a year-on-year basis, which was an impact of deferred launches amid approval delays. Collections had also fallen short of guidance. But going ahead, the company plans to launch projects with a total GDV of around rupees 42,000 crores in FY26 compared to just about 26,000 crores of launches that we saw in this year. So that has remained strong for the company. One other highlight here is that the DRHP for Prestige Hospitality Ventures was filed with SEBI on the 24th of April in this year. So going with the green for this stock because the launches going ahead will be quite strong. Coming to Sobha, good performance in this quarter. Revenue and EBITDA have gone up by around 63% and 52% respectively, both on a year-on-year basis. Collections have gone up by around 21% sequentially and by around 7% on a year-on-year basis. The sales value has also remained strong, going up by around 32% sequentially. So expecting this one to open in the green as well.
All right. Ria, thank you very much for that. Now, Lemon Tree Hotels and Sami Hotels. Next one's in focus. Mangalam is here. Mangalam, morning.
Good morning. So no surprises here. Beautiful numbers coming in from both these companies. Hospitality sector is on its structural tailwind, and that's exactly what's taking place. 15% revenue growth for Lemon Tree Hotels, 19% EBITDA growth, margins of 50%, among the highest in the industry that we've seen, and the net profit at around 29% as well. What led to this growth? Occupancy increase of nearly 557 basis points, led largely by their Aurika brand. Remember last time they opened the Mumbai Aurika. So from there to now, occupancy ramping up is a margin accretive for them. Management fees increased by about 16% as well. And we saw average room rate increase by 7% and total debt coming down by 10%. So no problems for Lemon Tree Hotels. Sami as well. Remember, recently they got some funds from GIC that improved their balance sheet all in all. And operating leverage is showing in their fourth quarter numbers as well. If you look at it, revenues grew by about 14%, EBITDA grew by 42%. And on a low base, the net profit actually nearly quadrupled from 11 crores, went all the way up to 45 crores. And this, again, has been led by a combination of occupancy and ARR growth. So revenue per available room grew by 21%. Balance sheet improved. Net debt came down from 2,064 crores to around 1,428 crores post the GIC investment. So all in all, good numbers for the hospitality space.
Checking in on the green side, all the hotel guys. Got it. Thanks, Mangalam, for that. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are Bajaj Auto, Suzlon Energy, Sobha, Prestige Estates, Lemon Tree, And of course, Sami Hotels. Stocks with negative news flow would be Mazagon Dock, Ola Electric, Amara Raja Energy, and SJVN, all on the back of numbers. Okay, that's the stock list. Let's find out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha, when you go to bed, tariffs are on. When you wake up, they're off, or vice versa. It's a crazy world almost, right? What's the latest in commodities? How are the commodity markets digesting all the volatility?
Oh, well, we've been choppy as well when it comes to commodities and currencies. And you have to take a look at crypto, by the way. And we've seen some profit-taking happen in that as well. But I'll start with the crude oil prices because we are headed for a second weekly decline. Apart from what's happening in U.S. and in sense of tariffs there, it is also about the OPEC Plus meet, which is on 31st of May, and they will decide production for the month of July. Well, they have been increasing production, and that has continued to weigh onto the market. It also is going to be about the IEA report, which is warning of a weak demand in China. The U.S. crude inventories also have seen a bit of a decline. And then there are potential new U.S. sanctions on Russia that the street is also looking at. So all of those factors weighing onto the market. In metals as a sector, the month of May has been quite interesting. We are closing May on a positive note for gold, silver, and copper. Aluminum and zinc, though, continue to see a bit of a decline. And today, the markets also are reacting to the U.S. data. The GDP numbers for the first quarter have contracted by 0.2%. The jobless continuing claims are the highest since 2021. The dollar index also has come off below 100. So that, in turn, also seems to be supporting gold at this time.
Okay, all right, Manisha, thanks a lot for that. Well, for the time being, though, we'll take a short break. Up next, we'll have the management of Cohance Life Sciences, who'll be joining in to detail their numbers and how do they see things ramping up from here on. Later on, we'll also get chatting with Sid Kemka of Motilal Oswal Financial Services. We'll get to some fundamental analysis. So, a little bit of that break, come back. We look forward to those chats.